Hey everyone, so today's the 23rd of November 2025. It is a Sunday, and I wanted to bring you guys an update because obviously some things have happened in the market this week, and there's a lot of panic in the market. And also, I think it's very easy to come out and speak, especially when portfolio's doing well, everything's going good. You can talk and smile and stuff like that. When times are bad, it's always good to, take a moment, address the issues that we have and why we're confident going forward. And something I want to do because my passion has always been to help people with their finances. And very often, when things like this happen, people just hide away, and I don't think that's a good thing to do. So we'll start with looking just at the S&P 500. So this week we obviously had a little bit of volatility. You can see here that the market's dropped around five-ish, 6%. Slightly recovered, so it's about 4.8, 4.9. Since our last market update, the last call we had, we've also dropped around 4 to 5% since the last market update call. So it's been a tough, 5 to 6%, sorry, since our last market update call. So it's been a bit of a ride. Obviously, one of the main concerns that we're seeing in the market is this AI bubble, and I addressed it during our last call, and is why we decided to diversify away from the US as much as possible. Um, while where we do see good bets, we still place them, obviously, but as far as possible, we try and allocate away from the AI stuff. But we were affected by ACMR. So ACMR is a chip producer, chip cleaner in China. And the reason why I bought them is because there's a big difference between the valuation in China and the US. And the different reasons for that, I won't get into it specifics. But obviously 27% drop is not a fun time to have. We took some profits previously, obviously didn't take enough, so that's why it's not where it is. It's always about 5% of the portfolio, so it's dropped quite a bit. Um, and the other things have dropped a lot. So Amara, we've just added, so we won't count this. This wave wall, we just added as well, so I won't count this. But bigger positions, if you look at it, like Vistry, Civitas, CCRN, TPA, these have all fallen quite a bit. And even one of the worst ones that we have is CCOI, which is Cogent. This is a whole nother issue. It's dropped quite a lot. We've since added, so it's about 1% of position at all times. So we've added a little bit. But we may look to add some more here. Okay, but just want to briefly go over. So the things that we have in our portfolio right now, I'm still pretty confident of our holdings. And one of the things that we tend to do is buy more when the market drops. Um, so right now we do have some cash. So it's about 8.9% cash. And in currencies, we have quite a bit as well, 4.16. The reason why I count currencies is you can see here that our currency positions have all done well. Whenever the market tends to take a hit or not do so well, the US dollar tends to strengthen. So these positions I can easily sell, and we can use these to buy into stocks. I'm going to address crypto right at the end if you guys don't mind. Okay, but because it's a smaller position and I've added Mara, but still small. So in terms of our bigger positions, I'll just go through them one by one. So I'll start with Daniels, which is our largest position. It's obviously not dropped a lot this week, but it has not gone much higher since we bought it. So it's gone about 30% higher, but it's over 2 years. It's not done much. The reason why we like this stock is because it's a leasing company, so it is stable cash flows, and we know at the end of the lease life we still have a ship. And it's also a very cheap valuation model. So you're gonna notice from all our bets, a lot of them have very, very low PE multiples, which means valuations are very low. So Daniels wise is 3.5. Again, there are very specific things we have to get into when we talk about a certain stock. But briefly, I just want to say this is 3.5. Within our other shipping place, we have Jorge Autoliners, and this has also dropped quite a lot in the past month. So if you notice, I was a little bit, I won't say angry, but I was a little bit upset at the way that these have traded. You can see this has gone down like 20%. And it's gone down 20% over the last month and a bit. And if you look at Hohe Autoliners, we're going to see the same thing. Very low price earnings ratios. It's dropped a lot because the market just generally is not very well covered in Norway. I believe that to be one. But also it's just an opportunity because people don't see this as an opportunity. At 4.8 is really, really cheap. You're looking at about 20% implied return based on this. And the next shipping play you're going to see is House. Also, it's dropped quite a bit. You can see it's dropped around 15%. At its worst, it's dropped even more. So it's dropped around, let's see, around 30% at its worst. So this has also been a drag on the portfolio. As you can see, the last 2 months' performance has not been great. But again, if we look at valuations, PE multiple wise, and we're looking at the next 12 months. So we're not looking at the quarters that have already happened. We're saying management projects them to do a certain way, and they're still trading at below 5 price earnings multiple, which is very cheap. Again, on an implied basis, it's about 20% return you're going to expect based on this. So if you look at these shipping stocks, they've not done terribly within this month, but as you can see over like 2 months or so, they've actually done pretty bad. Again, House went down, is still down 15%, so pretty bad. Hohe Autoliners is still down 20%, so it's still pretty bad. This week, of course, they've not done as badly, but over the last 2 months, I think these have done not so well. As you can see here, they're also a pretty big percentage of our portfolio, so 6% and 4%. So 10% plus Daniel's another 10%, 20% of our portfolio is just in these shipping stocks. The ones that are based in the US as shipping stocks, INSW and Starbucks, have done really, really well for us. So these I may look to take profit in two of these and move them into with WAWI and Hohe Autolines and maybe Daniels because our shipping exposure is very, very high. Like if you can see here, all these four positions added up, it is pretty high. But again, because valuations are low, I'm confident in going to the future that these bets will pay off, especially Hohe Liners and Wooden House because they have dropped so much in the last 2 months that I think there's opportunity there. So we may take profit in some of these and move them here. Okay, so moving on to the next one, which is gonna be, let's see, Civitas. So Civitas is an oil and gas company. So oil and 30% is in natural gas. And natural gas has really exploded in price. So it's gone up a lot. And oil is kind of stuck in this like $60 range, slightly lower. And Civitas is, I believe, a beneficiary of this natural gas boom. And also, I don't think oil is going to go much lower than it is now. On a adjusted basis, inflation adjusted basis especially, oil should be much higher, but it's not. And also, back to our theme of valuations, Civitas is trading at 5.5. So again we are looking at cheap, very cheap multiples. If we look at Civitas here, it's performed like minus 5% from the last month and a bit, so November to October, November, early November till now, so just about the beginning of the month. But obviously, when we started buying it, you can see it's been almost a 20% drop. So again, not really a fun time for us. We've been buying lower and stuff like that, but it's not been super fun time for us. We've been buying here. And I don't believe this trend will continue. I will say this though, I'm not a big fan of the merger that's happening. I believe someone asked me about this in my comments. And the reason I'm not a fan of the merger, again, is a discussion, but it just introduces risks which I don't think we should have. So I sold a small position here because of that. You can see it's a close rate. But again, given the valuations that we have, given the macro tailwinds we have for this stock, and again, this is next 12 months. We're not looking at the previous 12 months. We're looking at next 12 months forecasted. Returns should be pretty good. So again, I'm pretty confident of this as well. So yeah, you can see a theme here of most of our very large positions. We are confident because of valuations and stuff like that. I'm gonna get into two more just for illustration, and then I'm gonna go to the small positions quickly. But I won't go into as much depth. So Teleperformance is the next biggest position. It's around 5%. And Teleperformance has not done well. Again, we've started buying here, so it's not too bad. But again, it's like minus 11.8 since we started buying. So over the last 2 months, again, we felt a significant amount of pain in these stocks. But following our theme, very good valuations. It is not been doing so well because people believe this is going to be affected by AI. And while I do believe it will be affected, I believe it will be affected positively. So I believe the market is viewing it a bit differently from how I am. And that's why we have these opportunities. So again, you can see a theme here. Most of our bets that we have, especially the larger ones, are trading at a very, very low multiple. And that's why we're in them. But as you can see, they're punished by the market nonetheless, especially over the last 2 months. The last 2 months have not been fun for us, but again, we are confident going to the future. We don't time the market. We cannot time the market, but we're confident in the bets. Um, hey, last one I'm going to cover is a China Railway. China Railway is a railway company in China that's owned by the government. It's not done so well as well. You can see here it's dropped about 8%. This last drops because they released performance numbers, but performance numbers were not great. But it's a railway company, right? So, and it's owned by the Chinese government, so I don't expect it to go much, much lower than this. Of course, it can go to this like $3 mark, but I think this is kind of where we're at. And this again, low valuations, 5.2 over the next 12 months. So again, low valuations. And I emphasize these low valuation plays in my portfolio not because I have any special preference for low valuation. I just think these are good opportunities. If I see good opportunities, I would like to buy them. When I look at stuff like Google, which, for example, if we look at just Meta and Facebook, these tend to be a lot higher in terms of valuations. So here you can see 20, so much, much higher. Much, much higher. NVIDIA obviously is, because you're so dependent on the growth, it has these high multiples. And these high multiples tend to scare me, so I tend to stay away from them. Okay, so back to our portfolio. We're really asking questions about this AI bubble, and you can see here we don't have much exposure to the AI bubble apart from ACMR, which is 5% of portfolio. We reduced it when we took some profits on it, so it's much smaller. We may look to add to it because I don't believe this story is over quite yet. In terms of other AI plays, the other I would say is quite exposed is CCOI, which is Cogent. It's down 58%. Again, smaller position, so not terribly worried. So the plan going forward is pretty much going to be something like this. We're going to start deploying the rest of our cash. That's the first lever we're going to pull. Second lever we're going to pull is we're going to sell some of these positions in Forex. One, because I think we've made enough money from them, and two, because I think there are good opportunities elsewhere. Three, we're probably gonna rotate some of these smaller positions. Like Zyme probably is good enough, ripe enough for us to take profit. Carrier, same thing. Probably good enough for us to take profits and move them into these larger positions that we have. I still like shipping a lot, but because of the way that we risk mitigate, I won't allow myself to put more than 30% in a thesis, and 10% in a single stock. So I will try and just rotate some of these over. So again, I think we're in good shape. I know the market looks pretty scary and pretty down right now, but I believe we're in good shape because again, we've done the homework. We have not bought into very hyped stocks. We bought into very traditional cash flow generating stocks. So I believe we're in a good place. Not overly worried. Before we conclude this kind of update, we of course need to talk about crypto because I had 2% crypto. This used to be three and a bit. We have like a little bit in Link. and I've opened position in Mara as well. So Mara, we are not as down as this looks. It's only about 10% down. But because I opened it this week, it looks a little bit scary. So obviously for crypto, let's go to TradingView and have a look. So crypto has fallen a lot, like a significant amount, right? Like looking at, you know, 30 at its worst, 35% drop, 32% for Bitcoin. And this story is even worse for ETH, which is my preferred cryptocurrency. Yeah, so it's about 42% for ETH. So you guys can see here, this is something that's a little bit scary because of how much it's dropped. Is this fundamentally driven? It's very hard to say. I think we're lacking narratives in the crypto space. Previously, we had Trump and the ETFs coming to the space, and that drove a lot of liquidity into the system. We had a lot of debt. So digital asset treasuries, people deciding to, instead of holding cash, hold crypto, that again drove some liquidity into the system. But because of the lack of narratives, we don't have any reason for crypto to skyrocket again. And that's the reason why when I look at the cryptocurrency market, I think it's a bit shaky. It's worth holding some in our portfolio, but it won't ever, I mean, not right now, it won't be a large portion. There was a point of time where we were like 20% in crypto. Um, that time is not right now, definitely. However, I will say this, Mara was interesting to me because of how much Bitcoin has dropped. We did see just now that Bitcoin has dropped around 32%. But Mara, which is Marathon Digital, Mara Holdings, has dropped even more. So if we take the price, it's dropped as much as like 62, 63%. Okay. So obviously sensitivity to Bitcoin is a lot higher being a miner and it holds a lot of Bitcoin as well. So there's some risk there. But I believe this is overdone. And once it corrects, I believe Mara will correct much faster upwards. So that's why we bought Mara instead of holding regular Bitcoin. We can talk about hash rates and how much it costs to produce a Bitcoin. But I don't think that's a conversation we should have now because it's a very long one. And also, if we look at short interest in Mara, it is very, very high. Something I want to show you guys. Let's see. Yahoo Finance. It's not here. Okay, but anyway, short interest in Mara was very, very high. Oh, there we go. Short interest. Okay, so we can see here 31% of float is in shorts. So this is a very heavily shorted stock. Again, very sensitive to Bitcoin. So if Bitcoin were to recover, I believe Mara would be the ultimate beneficiary. We're a little bit early in getting in on Mara. I think too early. You can see we got in at about here, and that's way a bit too early. But once it recovers, I believe it will recover fast. So how far will this crypto market drop? I don't know. Let's talk about MSCI potentially removing MicroStrategies from it. So that causing a lot of forced sellers of MicroStrategy, will that cause Bitcoin to fall even more? Or does that just cause a discount to net asset value for strategy? It is possible as well. So there are a lot of possibilities in the market. And for us, it's about just managing risk and allocating accordingly. Currently, we are around 5% in crypto because of this Mara holding. So we have Mara at about 1.67, ETH at about 2.19, and Link, which is very, very small. So total, you're looking at about maybe 4 to 5%. Um, we're down about 10% on this Mara position. Is it worth adding? I think once I see the bottom of Bitcoin, it's worth adding Mara instead of Bitcoin again because of the velocity and asymmetric risk. But right now, as I see it, I think I don't want to hold more than 6 to 7% in crypto out of our entire portfolio. It's just too risky right now, and I don't see the narratives. If I saw the narratives, maybe we'll add more, but we don't see the narratives right now. But yeah, that's all for the update I have for this round. Um, in terms of the risks, we did talk about some of the risks that we see, especially in the US. Hence, we've gone away from the US as much as possible. And some of those are playing out, unfortunately. So we are affected, just not affected as much, hopefully. And there's some in the earnings announcements which did not play in our favor in the last 2 months, causing our portfolio to not look so good. But again, we're confident because of valuations, because we've done the homework. I think we will be okay. We'll definitely be okay, and I think we'll do well. Okay, but yeah, all confidence to the crypto, not crypto, but our portfolio. Okay, thanks, guys. That's all from me.